Hi, this is Paula from the Expert Trade Ideas team. Welcome. Here are the latest developments from the crypto world and their political implications for crypto regulations. Rumors suggest that Kamala Harris, the newly declared Democratic presidential candidate, may adopt a more favorable stance on Bitcoin and cryptocurrency, influenced by her tech advisor and her husband Douglas Emhoff, who is described as a crypto guy. Harris's potential openness to cryptocurrency is further indicated by her ties to Silicon Valley and her pro-business reputation as a senator from California. Billionaire investor Mark Cuban mentioned receiving multiple inquiries from Harris's camp about crypto. However, it remains uncertain how these inclinations will translate into actual policy changes. Now, let's look at recent findings from a government report that challenges some prevailing assumptions. One of the smartest, most efficient governments on Earth has found out what we all knew. A recent report from Singapore's Ministry of Home Affairs reveals that criminal organizations still prefer cash over cryptocurrencies. The 2024 Global Threat Assessment highlights that despite a slight increase in crypto use since May 2020, cash transfers, bank transfers, and the Hawala system remain predominant. The report cites that illicit groups primarily use these conventional methods. Crypto used by these groups remains minimal. Singapore continues to refine its regulations on crypto, enhancing measures to combat money laundering and criminal financing. Turning to the legislative arena, there's a new development regarding cryptocurrency mining regulations. This is what Warren's half-truth looks like and why Senator Roger Marshall withdraws his support. Senator Elizabeth Warren has called for stricter regulations on foreign-owned cryptocurrency mining facilities in the U.S., citing environmental and national security risks, particularly from Chinese-owned operations. During a Senate committee hearing, Warren emphasized that many of these facilities, which consume large amounts of electricity and can potentially disrupt the power grid, are owned by Chinese nationals with ties to the Chinese government. She highlighted the need for stronger laws to prevent foreign exploitation and ensure national security. Warren pointed out that foreign nationals have used cryptocurrency to bypass traditional banking regulations to secretly buy U.S. crypto mines and stressed the importance of empowering the Treasury Department with the necessary tools to combat these risks. U.S. Senator Roger Marshall has withdrawn his support for the Digital Asset Anti-Money Laundering Act (DAML) bill introduced by Senator Elizabeth Warren. This legislation aimed to regulate the cryptocurrency industry to prevent illegal activities like money laundering and terrorism financing by classifying certain crypto service providers as financial institutions. Marshall's reversal reflects concerns about regulatory overreach in the crypto market. The bill has faced significant opposition from the industry, with critics arguing it imposes unfeasible compliance requirements and could harm the sector. Despite Marshall's withdrawal, the bill still has support from 18 U.S. senators. In market news, we're seeing some intriguing developments in Ethereum trading. This makes sense to a professional trader, but not a gambler or amateur trader. Ethereum has seen a significant price decline of 6.6% this week, dropping to around $3,100 following the launch of Ethereum spot ETFs. Despite this, Ethereum open interest OI has surged by $1.5 billion in the last 3 weeks, indicating increased market participation and leverage trading. This rise in OI suggests potential for higher market volatility and possible price swings. Although Ethereum price dipped recently, the increased OI hints at a stronger market trend, potentially continuing the 7.1% gain seen over the past 3 weeks. Currently, ETH trades at $30.78, with resistance expected at $3,500. Meanwhile, Ethereum spot ETFs have recorded a net outflow of $469.83 millions, with Grayscale contributing significantly to this outflow. Despite initial price drops, it remains unclear if Ethereum ETFs will eventually boost prices similar to Bitcoin ETFs' impact. Similarly, Bitcoin's mining activity is showing promising signs. This makes sense to a crypto on-chain data specialist team like Expert Trade Ideas, but not a gambler or amateur trader with very little understanding of how crypto actually works as an industry. Bitcoin's mining hash rate is nearing its all-time high as the BTC price recovers above $67,000. The 7-day average mining hash rate, which tracks the total computing power connected to the Bitcoin network, has surged recently, indicating increased miner activity. This rise follows a steep decline in May due to bearish market conditions and reduced profitability from April's fourth halving event, which cut miners' block subsidies in half. The recent price rally to $67,000 has improved miners' revenues, driving the hash rate back up. Currently, Bitcoin trades around $67,500, up 3% over the past week. In a twist of irony, let's turn to a notable figure in the crypto world facing legal challenges. This is what hypocrisy looks like wherever it's found. Andrew Left, a known critic of cryptocurrency and figure behind Citron Research, faces charges from the SEC for orchestrating a $20 million stock manipulation scheme. Despite his past denunciations of the crypto sector as fraudulent, Left is accused of manipulating stock prices through deceptive public recommendations, gaining over $10 million by inducing stock volatility and reversing his positions for profit. The SEC alleges that Left misled investors by posing as an independent researcher while having undisclosed financial arrangements with hedge funds. Additionally, his Citron Capital was reportedly a facade with no external investors. This legal snag adds a layer of irony to Left's career, given his vocal criticism of crypto's legitimacy. Moving on to an analysis of the current trends in Ethereum exchange-traded funds, or ETFs as they are commonly called, this is what intelligent reporting by Expert Trade Ideas looks like anywhere it's found. Despite the significant net outflows from the Grayscale Ethereum Trust ETF, there have been substantial net inflows into other Ethereum ETFs, such as Grayscale's Ethereum Mini Trust ETF and BlackRock's iShares Ethereum Trust ETF. These inflows indicate that there is still considerable investor interest in Ethereum ETFs overall. Here's a summary. Grayscale Ethereum Trust ETF over $1.5 billion in net outflows since July 23rd, with $356 million on July 26th alone. Grayscale Ethereum Mini Trust ETF recorded net inflows of $44.9 million on July 26th, totaling $164 million since launch. BlackRock's iShares Ethereum Trust ETF net inflows of $87.2 million on July 26th, totaling $442 million. Therefore, while there have been significant outflows, other Ethereum ETFs have seen substantial inflows, leading to mixed but overall positive net inflows into Ethereum ETFs. In crypto commentary, we now turn to a notable industry figure's perspective. This is irony, deception, and blatant expression of self-interest over the people's interest, anywhere it's found, and shows Ripple's stand in crypto is deceptive and always has been from their inception. John Deaton, a lawyer known for defending XRP and a senatorial candidate in Massachusetts, has disclosed that 80% of his net worth is invested in Bitcoin. Deaton, a vocal XRP Ripple advocate, has also received significant support from Ripple amidst its legal battle with the SEC. This backing includes donations to his campaign. A notable figure in the crypto space is making a case for regulatory clarity. This is what self-interest looks like, but old Tinkle Voss might have a point. Tyler, co-founder of Gemini, is urging the U.S. government to appoint a new SEC chair before the upcoming election. He believes that knowing the next SEC leader is crucial for the crypto industry, which should not face another 4 years of regulatory uncertainty. Like in the past, he's criticized the Biden administration for its handling of crypto issues and calls for a clear and bipartisan approach. Finally, let's examine a key prediction from a former stockbroker, financial commentator, and radio personality. This individual has zero knowledge of Bitcoin's intrinsic function, the very asset he vehemently claims to understand. His prediction, which has been made frequently over the past 15 years, remains unfounded and inaccurate to this day. This is what Pride Before the Fall looks like. Peter Schiff, a gold advocate who has often been wrong and lost a fortune in the process, conducted 2 polls to gauge Bitcoin holders' commitment in the face of significant price drops, which is just normal price action for Bitcoin's current volatility profile. The polls revealed how the man who claims he is the only person on Earth who is correct has learned yet again he is in all probability very wrong. The first poll asked if holders would sell their Bitcoin if it fell below $15,000. Results showed that 89% would ride or die, meaning they would not sell because they understand why they bought it as a US dollar hedge over gold. Do you? Expert Trade Ideas have answered this on many occasions. The second poll inquired if investors would sell or buy more if Bitcoin dropped to $3,000. About 90.6% of respondents indicated they would hold and buy more. Schiff may tout gold's long-term value, but as Keynes said, in the long run, we are all dead. Right now, Bitcoin is outshining his cherished gold. Times change, and so do the best investments. But Expert Trade Ideas suspects that you can go broke being right eventually. And that wraps up our news coverage today. Stay tuned for more updates and analysis. Thank you for joining us. Have a great week.